Hello traders, this is Michael Huddleston with the Inner Circle Trader Pro Traders Club entry for May 16th, 2011. And as you can probably tell, the seasonal allergy season has wreaked havoc on my voice. I apologize if I'm a little raspy, and I apologize for this being a rather short Pro Traders Club, but yeah, it is what it is, guys. Alright, real quick, we are looking at the fiber, and this is Friday's action in here, Friday the 13th. Okay, and this was a short that had a confluence of two patterns. One you've already learned about and are familiar with, and the other is one that I've spoken, in fragments, basically, kind of like hit and miss. Whoever happened to catch me at a chat room session or whenever the opportunity presented itself real time and I was in a conversation with an individual through either email or real time, I would make a point this pattern out. After we get through the summer, right before we start our journey with the $1 Million Challenge in September, I will be releasing a complete set of high probability short-term trading setups and patterns. And this one here we're looking at is a turtle soup. For those that are in a hurry, can't wait that long, pick up the book Street Smarts, and you'll find it in that text. It's basically a false breakout pattern. So we have a key intermediate term high in here, nice reaction high where price pulled back from it. Now I'm not going to cite the retracement levels in here or the optimal trade entry in here. I'm just going to refer to the fact that we did break above it and entered a longer term high probability sell region. Okay, we were trading at 143.20 institutional level. I had a limit order to get in here, and I was messing around with the orders, and actually price had moved up, and I just went in at the market, and you'll see a screenshot showing these entries. I'm not going to be referring to it in just plain hindsight and expect you to just believe me, because I know there are some individuals out here that are skeptical, and it's justified. But I'll show you where the entries were. But the pattern is basically when price moves above an intermediate term or key reaction high, always be on the lookout for a false break and fake. In other words, it's going to break out, and those that would have buy stops above here, thinking that we are going to move higher, would expect to see price continue on higher. Well, if you would draw your attention to the time frame when this setup took place, okay, we are in the London Open. Now, we're roughly, if you want to use the very high, okay, we're 15 minutes away from exactly 3 a.m. So it's pretty consistent. So that was the entry here based on the pattern that you'll learn more about over the summer, which is turtle soup short. Okay, but there was a confluence of this pattern lining up with a pattern you've already learned more about, and let's take a look at that. Let's go to a 15-minute chart. Okay. And just for clarity's sake, I'm going to take these fractals off. Okay. Nice price level in here. Traded up to it and fell off precipitously. Okay, this is a event I like to call riding the lightning, much in the same way it is here, 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 and here. Okay, where price is very quickly just dropping, Very fun when you're in it and on the right side, but scary if you're on the wrong side. Okay, obviously the market has been trading off, selling short. I mentioned. Well, let me get back to that time frame back here when I cover this one here. All right, basically you are looking at a intermediate term high in here, intermediate term low in here. So you want to take the high, draw a fib down to the low, okay. Notice that we have optimal trade entry right in here, right at the London Open, in the direction of the intermediate term trend and market flow being down. Also note that we had a nice key resistance level on the fact that we have a low here, price consolidating above it, and several lows in here that were unable to go lower. So there was a nice convergence and confluence of events taking place at the 143.20 institutional level. I got short 143.22, and again I'll show you a screenshot with these entries on the live account in a second. I am also going to refer to a short that let me see how I can pull this up without moving it off the chart. Okay, we have this entry in here at 148.83, and how I got this position and this rectangle here that's highlighting this area, this region. I'll bring that up in a second as to why it's there, but for now, notice the high here fell off and then traded up into a nice 148.80 institutional level. There was a I was in real time in Baby Pip's chat room, and I had mentioned that the market was breaking up to the upside, but I was calling for everyone, if it was going to continue, to look at the 150 area as a possible upside objective. But again, like the last pattern we just discussed, whenever we get above key highs or lows, well, in this case, when you're getting above key highs, always be on the lookout for a possible false breakout. And the market was unable to make higher highs in here, so it slipped back below and then ran back up into a optimal trade entry. Now we're going to come back to this setup here for a moment, but let's look at why this rectangle is highlighting this region. Okay, this is a 15-minute chart. Let's go to a daily chart. Okay. Let's take off this fib. Alright, obviously you can see the 79% retracement and the 62% retracement, but what is this plotted off of? Well, let's go to a weekly chart, guys. Okay, here is your high on the weekly chart and the most recent lowest low on the weekly chart. If you plot that from the high, draw it down to the low, here's your 79 and your 62 right in the middle. You get optimal trade entry, and you'll see exactly why the price stopped dead on the dime. See these highs in here? Okay, so we're going to have this band. We will highlight that with, let's go blue, just for contrast paper purposes. Okay, and then let's drop back down to a daily chart. So we have all this activity in here, looking for a possible high. Let's go down to a 4 hour. Okay. Here's our institutional 148.80 level. And the high on the weekly charts that we noted as a key resistance level on those old highs. Let's go down to a 1 hour. Okay. And you can see how this rectangle now is no longer needed, because you can see why we're looking for this price level in here. Price consolidated, try to make several little attempts to go higher, rejected this one strongly. And let's go down to a 15-minute chart. And here is that high. We'll draw down to the low. 79%, 62%, optimal trade entry right in the middle, and down she goes. Okay, so that was the reason why 148.83 was taken as a long-term or intermediate-term short, and new shorts were added at 143.22 from losing this high here to this low. Optimal trade entry in here, and because this is a demo account and I'm doing the analysis on, and I do have notes on my other platform, I'm not looking to divulge that right now, but for the sake of illustration, this is the reason why I've been basically sitting on my hands, just riding it out. I don't like to talk about the position, but I will be looking to take profits today, and I'm just waiting to see how Asia going into London Open transpires. So we did have a small little gap, traded down, filled the gap, now we're pulling back in. We may very well see price try to retest this low here, and if it goes above that, we could look for a retest of this low or this low in here. And I'd like to see 140.50 be taken out decisively on the downside, but it does look like it wants to try to pull up a little bit and set up some engineering for some possible shorts. But that will remain to be seen. So let's do what I promised and show you real quick the entries on the two swing positions, and hopefully that will suffice.